Good afternoon, gentlemen. How you doing?
Good. Can you hear me okay?
How's it going, Tommy? Hi, David.
Hey, Anton.
Meet David. David, meet Tommy. I don't
Good
know
to
if
meet you,
you've
David.
Met each other before.
I'm not sure if we have. I don't think so.
There's always a good first time then. Are we ready to go, fellas?
Yep, indeed.
Let's rock and roll. Okie dokie. Good morning, good afternoon, good evening, wherever you are. Thank you very much for joining us. This is Startup Fundraising Q&A, and it's our 116th session we're doing. And if 𝗦𝘁𝗿 wants to come up, all you need to do, guys, raise your hand and we'll bring you up on stage. Guy? There's a hand raise. You'll see it at the bottom right of your screen. Otherwise, I can't bring you up, buddy. Okay, until Guy sorts that out, quick introduction to everybody. We're doing this Q&A to help founders with whatever questions you may have in terms of your fundraising journey. Whether you want to know when's the right time to reach out to an investor, how much you should ask for, who should be your sort of source. Is it an angel investor, a VC, crowdfunding, or should you go to a bank and get a loan? Or do you think you've got a chance to get a grant from some government or philanthropic organization? Whatever that may be, this is the place to ask it. We're going to be here now for the next 58 minutes. And as soon as we're ready, we'll start taking questions from yourselves. The idea is that there are no right or wrong questions, and there's no need to be shy. It's a learning curve for us all. So today, your questions can be on anything to do with investor outreach, pitch decks, angels, exits, valuations, due diligence, and all that jazz. And all you need to do is raise your hand. We'll bring you up on stage, introduce yourself, and then fire away with your questions. There are no right or wrong questions, and there's no need to be shy. However, for those of you that are tuning in either via Facebook or, unfortunately, we're not able to monitor those comments there. So you would need to join us live here on LinkedIn. Whether you can go to our website, StartUp to ScaleUp Club, and then find today's session, which is Startup Fundraising Q&A 116, or perhaps just hop onto LinkedIn and search for Startup to ScaleUp Club, and you'll see today's session. Now, we've had over 260,000 people join us, where mainly when we did this on Clubhouse. We've now moved to LinkedIn, so we need all the help we can get. Therefore, if you do find this useful at all, please feel free to share it with your network. The more the merrier. I guess last thing to mention is, one, that this is being recorded, obviously, and two, we run 4 regular rooms per week: Mondays talent, Tuesdays product and tech, Wednesdays growth, and Thursdays fundraising. They're all from 12 to 1 p.m. UK time, so please do feel free to join us for those sessions as well. Now, quick introductions. My name's Anton 𝗏𝗂. I'm an Albanian in London. Normally, I used to work with startups as soon as they got investment and embedded within their teams and help them hire and keep the right people. Now, I don't do much of that. I'm mostly focused here on Startup to ScaleUp Club. I'm also still helping a little bit some startups with talent and some others with growth. And lately, I've been helping a few angels and family offices with their due diligence and assessment. And I've got today a stellar panel of 3 fantastic professionals in the investment world. I guess we can start with David, since it's his first time, and then Guy and Tommy. A quick intro, please, fellas.
Cool. Thanks, Anton. Great to be here. Hi, David. 45, married, and 1 kid. Spent the last 25 years in venture and tech, half of it building companies and products, half of it investing. I had the pleasure of basically raising my own fund, 150 million, doing corporate venturing, investing for Telefonica, as well as running M&A deals. So I had both sides of the table. On my day job, I'm a fractional chief commercial officer and COO with different startups. I run a community called Alma Angels that, with a mission to generate $1 trillion in women-led wealth by 2050 by building a community of 10,000 angels investing in 1,000 female founders every year.
Hi, my name's Tommy Breen, and I'm a senior advisor at the Growth Stage. So we are a capital raising platform supporting, as our very on-the-nose name gives away, businesses that are in their growth phase. So typically that means companies call it raising Series B or later, right up to IPO. And so in numerical terms, we tend to support businesses that will be looking to raise around $15 million or more from institutional investors. And then outside of that, I'm also a mentor at Founder Institute, so doing a lot of hands-on work with earlier stage startups as well.
Hi, 𝗦𝘁࿴𝗶𝘀𝗵, co-founder of Varesco Group. We do everything within the food and agricultural sector. So we have an advisory side which looks at fundraising, commercialization, interim management, M&A, exit readiness for companies within food and ag, all the way from startup to NASDAQ listed businesses. And then on the investment side, we're looking to build a real assets strategy in Australasia and a private equity strategy in the UK and Europe. My background is accountancy, banking, and then I worked for a VC for 4.5 years before founding Varesco. So have got a bit of experience across mainly food and ag, but also on the venture side as well.
Brilliant. Well, thank you very much for doing that, gentlemen. We really appreciate it. We're now going to keep you here for the next 53 minutes, and hopefully we're going to get some good answers for our founders, both the ones that are live, but also perhaps we might be able to go through some questions that were sent in to us. So just to reset the room for those of you that have just joined us, this is Startup Fundraising Q&A. It's our 116th session. We used to do our sessions on Clubhouse, where we had over 260,000 people join us. We're now here on live, LinkedIn Live audio, and we need all the help we can get to spread the word. But if you've got any questions today, please don't feel shy. All you need to do is raise your hand. We'll bring you up on stage, introduce yourself, and then fire away with whatever questions you have. There are no right or wrong questions, by the way, because it's a learning curve for us all. Today's question could be on anything to do with your fundraising. So let's say your investor outreach, when's the right time? How much should you ask for? What valuation should you try and aim for? What's your pitch deck? How should it be? Or perhaps you want to know, should you actually go to a VC or an angel or a crowdfunding or whatever that may be? This is the place to ask. Please keep your sort of introduction short as well as your questions succinct. And for those of you tuning in via YouTube or Facebook, please remember that we're unable to monitor your comments. So you'll need to either go to StartUp2ScaleUp.club or hop onto LinkedIn and search for StartUp to Scale Up Club, and then you'll find today's session. Now, we've got 2 people that have come up. So we'll...
how do we stop the creepy government?
Okay, lovely. So this is a... Okay, how do I move you? Because clearly we're not having a good time here, are we? Okay, move to listening, Kim, and also we can report a block, Kim. Trolls are a perfectly normal thing to happen in our world. So let's start with Mohammed. Mohammed, welcome back to our stage. Please introduce yourself and fire away with your questions.
Hello, everyone. I'm Mohammed. Thank you for having me. I'm the founder of 𝗦𝘁࿍𝗶𝘀𝗨𝗽 Limited. Actually, my question is just about if I aim to raise a small amount of money, like $10,000 or $15,000 to get me running for the MVP, for example, how would you approach that, and how much percentage would you give in return? Thank you.
Thank you very much, Mohammed. Mohammed, would you mind explaining a little bit for those that haven't heard about your company? What is it you're trying to do with 𝗦𝘁𝗍𝗁? And so most importantly, after you do that, maybe if you can provide a bit more detail in terms of what is it that you're trying to get the work done for that, let's say £20,000, if that makes sense.
Sure, definitely. So basically, 𝗦𝘁𝗍𝗁 is supposed to be an infrastructure for decentralized application to give a core functionalities and transaction bases. So it basically allow transparency on transactions. And I would use the funds to basically hire specialized people. Like I have the front end in certain language and the back end in certain languages, but the code is not as clean as to be production ready as I have done it using AI and different tools. It would require more specialized people. But I would know what is the right technology to use. And I already know everything. That's why I can have a scalable product in less than 10K. I would use the rest of the 10K on marketing. And it basically provide an easy access to build use cases in relation to those transactions protocol. And we have a big amount of use cases can be applicable where we can generate tendering solutions or anything where we want to have an escrow in the middle.
I hear. Okay, well, thank you very much for that. I'll give you my quick 2 pence and then I'll pass you on to the investors for a bit more meat on the bone. Personally, I would look at angels. I would sit down. Is it New Zealand you're based in, if I'm not mistaken, Mohammed?
Yes, it's
good man. So I would sit down and research a list of angels in New Zealand, but also some businesses that would ideally be your customers. There's a lot of, I don't know, construction firms or perhaps estate agencies, whatever that may be, that 10 to 20K is not the end of the world for them. And I would kind of use that as you are an investor, you're going to get XYZ equity, and also I am happy to provide this to start with for free or however you want to do. And the beauty of that is that you kill 2 birds with 1 stone. One, you get to get product market fit, or at least prove it and test it, and the other one, you get the money. In terms of percentage, to be honest with you, 10 to 20K, again, it depends on the market, etc. But I don't think it's something that you need to go beyond 5%. But I'd love to hear what the fellow's going to say. So maybe this time we'll start with Tommy, then Guy, then David, so that we give him some time to sort of learn how we go about the questions here. Tommy, do you want to start first, buddy?
Yeah, sure. Yeah, I think you probably covered it pretty well. Like, I guess, raising 10 or 20 grand, if that's all you need, you're going to your only real option, I would say, is friends and family / angels. And yeah, I guess probably you'll have to give away, you need to try and give away as little equity as possible because it's such a small amount of capital and it's only paying for, a very, you're going to finish the development, which is pretty important. But in marketing terms, even if you had 7 or 8K left, that's not really very much for marketing. And I would just think about it in another, coming at it another way, is it, potentially beneficial to try and find a co-founder? So I'm guessing because you've done some, coding and, software engineering yourself, you probably know some people in that space and have trained with them. So maybe if people who, ideally you already know, you get on with, you think you could work with, and they have the skills that you are lacking, so they can plug that gap, and together you could actually get a production ready product out to the market. It may be worth thinking about a co-founder that you could bring in, maybe giving them 10-20% equity and, structuring it potentially as an earn out as well, maybe that they don't get it all up front, but, rather than raising capital and giving away equity, if you have somebody that you can, build a product with and push that into production with, and that, if you guys can actually do that yourselves for the first couple of years and get your first 2 customers, whilst you may ultimately give away more equity than raising 10 grand, it's much more valuable if you have a really good co-founder that can help you build the product, and you can wait until you're ready to raise a few $100 grand and things like that. So I would think about a co-founder, or looking, are there, don't know New Zealand so well, any accelerators you can join or anything like that could help you out with finding co-founders or even provide some funding. So I would look at it that way, and not giving away 5% for 10 grand. If it's what you have to do, I guess you have to do it, but it's not ideal probably.
Thanks, Tommy. Guy, any thoughts on this?
Yeah, I think Tommy's covered it pretty well. I think you want to be bootstrapping through friends and family as much as possible for not a huge amount or huge sum of money. I mean, it's well before you'd be looking at any kind of institutional involvement in the business. I did wonder, just slightly similar to Tommy's point, but whether you could, if you're utilizing staff or need that to employ people, whether you could pay them via equity again, but just make sure that you're not giving away much of your company to do that, and whether one of those people that's doing the technical side could be a useful co-founder, then that, that's pretty helpful to have. New Zealand's not my strong point in terms of financing, but I did wonder if there are any kind of, just moving on from the accelerator point, whether there are any kind of business friendly financing options like loans or any schemes like that where you could use debt financing or some sort of early stage business loan. So it'd be worth researching that, but obviously making sure that you don't that the terms are right and you're not kind of laden down with interest payments. That'd be my thoughts.
Thanks, Guy. And last but not least, David, any thoughts on this?
I'll try to be super brief and actually add value because I tend to agree with what was said before. So please take into account that everything I'm saying is my opinion based on my experience, and I'm making a lot of assumptions here without knowing much about you. But I would not, if possible, go and actually raise for a 10K round. I'll either try to tap into savings, take a loan, or hire somebody, because it sounded like what you actually need is somebody to basically just do one over the code that you build with an AI. And there's different ways to try to finance that. Equity is actually the most expensive way to go about doing that, because you actually give somebody control on your business. And they will not want 0.1%, like Anton mentioned. Like, people will want like several percentage points, and for a 10K it's probably not worth it in terms of the risk of getting somebody. Because I think one thing that people don't really realize is it's easier to get a divorce than to get rid of somebody on your cap table legally. So if you want to bring somebody at that, it needs to be for something material. Take into account that not everybody has friends and family that can give them 10K or a loan or invest. I would definitely try to think about bootstrapping or sweat equity in that perspective. But even then, I wouldn't go more than 1 or 2 percentage points. And it's a difficult position. How do you start without giving away too much? But that's all my 2 cents.
And that is spot on, David, and I totally hear you. It's that simple, Mohammed. If you can make do without that, especially since it's such a low number that it's difficult for you to give away a big chunk of equity.
Yes, sure.
And somebody giving you that 10K, a lot of them will be like, well, it's not worth for me to do it for 1% or 2%. So maybe, I don't know if you've looked into the grants ecosystem. Now, unfortunately, I'm not as knowledgeable when it comes to New Zealand grants, but there's probably some opportunity there, because you're not looking for a huge deal. And I'm glad David mentioned the lending part, and also Tommy mentioned the accelerator part. There are accelerators out there that actually you join online, and I'm sure there'll probably be some that you can join where they offer 10 to 20K investment.
All good. Thank you very much, everyone. I appreciate that. I was hoping to hear as well. I should ask for more. Yeah, thank you all.
You're very welcome, and best of luck, buddy. Right, quick reset.
Actually, you are muted, Anton.
Can you hear me now?
Now it's all good.
Okay, good. Thank you. Sorry. I was saying quick reset of the room then for those of you that have just joined us, and also for those of you that have just tuned into YouTube or Facebook. This is Startup Fundraising Q&A. We're doing this to help founders go from startup to scale up, hopefully, and help you with any advice that you may have on your fundraising journey. Those could be things like when's the right time to reach out to investors? How should you go about reaching out to an investor? Should it be a VC, an angel, a crowdfunding, or perhaps should you go and get a loan? How do you get a pitch deck done? What about valuations? Anything within that sphere, all you have to do is raise your hand, we'll bring you up on stage, introduce yourself, and then fire away with your questions. There are no right or wrong questions, and there's no need to be shy. We also run a few other rooms, so in total it's 4 per week. Monday's talent, Tuesday's product and tech, Wednesday's growth, and Thursday's fundraising, and they're all from 12 to 1 p.m. UK time. If you go to StartUp to ScaleUp Club, StartUp to ScaleUp.club, that's our website, you'll be able to RSVP to all future rooms between now and the 19th of December. And now, if you want to ask any questions and you're on either YouTube or Facebook, please hop onto LinkedIn. Either just come onto LinkedIn and search for StartUp to ScaleUp Club, or go to our website and click on today's session, which is Startup Fundraising Q&A 116. If you're finding any value in this, please feel free to share it with your network. We need all the help we can get. We used to have, or we got up to just over 260,000 people joining us when we did this on LinkedIn, on Clubhouse. And now that we're on LinkedIn, I think we need to spread the word a little bit. Now, if there are no questions live right now, maybe we can go to some people that sent in a few questions. Hopefully, this isn't a question that we had last week. Music tech founder in Bristol, they're pre-seed, and he's a sound engineer by trade. I'm building a platform for AI-powered music mixing and mastering. The challenge is that many investors don't see music tech as scalable. How do I pitch the broader applications of our technology, such as podcasting, video production, and what sort of user metrics should I present to hopefully show some earlier adoption in terms of getting investors excited? And if I can, then ask 2 more questions. One, who should I reach out to? So investor persona, and what's a right amount to ask for at this stage? This time, let's start with David, then Tommy, then Guy, please.
So just to get clarity, what does actually music tech startup do?
The way he's explained it is, I'm building a platform for AI-powered music mixing and mastering. The challenge is, yeah.
And basically 3 questions. One was, how do I present the future market potential and make
exactly, because so he's saying that the investors he's spoken with feel that music tech is not scalable, just as that. So do I then pitch broader applications like tech, in podcasting, video production, etc.? That's the first question. The second, what user metrics should I present to show early adoption? And then the third, but or we can take them all in one go. And the third was investor persona, and what's the right amount to ask for at this stage?
Okay. Right amount, I have no idea. It really depends what you want to build. But in terms of a framework thinking, I'll put, what is the amount of money you need that within 18 months you'll create amazing evidence that you can raise the next round? So it really depends on what you're building and what you're trying to prove. If it's a technological leapfrog that you need to evidence, then you need enough money to hire the best people to do it. If it's a commercial one, then what will get you to that commercial, assuming the product is already built? So based on what you'll need for the next 18 months, that's how much you need to raise. I think there's a fallacy in terms of TAM, or like show me the market, that sometimes people don't understand, which comes from how do you articulate the growth? Because when VCs say the market isn't scalable, it can be translated to many, many approaches. For example, in music and media as a whole, one of the biggest challenges that market forces like publishers and other entities, it's very centralized, and people the industry itself has a disincentive to bring innovation that will kill them out of the game. So if that's the challenge they're facing, you should show how what you do can actually get in. So perhaps the traction you'll need to build is aligning with that. But the core usage I will and the core framework I try to use when thinking about TAM is basically unit of value. So if you go online and Google unit of value by Greylock Partners, it's a great blog post that breaks down. But a minimum unit of value is the smallest thing that you sell that creates value and people are willing to pay for. So if you're providing an AI tool to do mixing, how many like is that like a license fee, a one-off, or monthly subscription? And if you're able to quantify that, you say, okay, how many units of values are in the world not related to me? Meaning, if the people that buy it are music studios, how many music studios are in the world? And if there's 1 million and I'm selling each one for 100,000, that's my total TAM and the potential. But again, if you're trying to look at adjacent markets, then I'll try to use the same methodology into what is an adjacent market and what does your product look like within that, and how many of those can you sell within an adjacent market. So it's not that easy, but really, like, based on what you described, that's the high level approach I'll go about doing that. There was another question that I missed.
No, sorry, I've just lost it now because I was sharing this question that we had from YouTube. So you answered the first question. You answered the second one. The third one was investor persona. Did you answer that?
No, I did not. The best one at this stage are people that come from the industry that know the problem that you're trying to solve. My assumption is the product itself solves a specific problem that we want people to adopt it. It's easier to get people that have suffered from it or have seen other people within the industry suffer, because then can relate to the problem and they can go with you on the journey of your success. What happens if this works? Investors invest based on two emotions: greed or care. The more they care about it, the better it is. But the more greedy they are, the less they need to care about it. So if you can evidence the two factors together, that's better. But if you can only do one, focus on the greed. And the translation of a problem in an industry I'm already familiar will make it a lot easier for me to do it.
Thank you very much for that. Tommy, any thoughts on this?
Not lots to add, really. David's covered it pretty well, and I guess, without having the person here, we can't get any more context on the actual business. And also, I'm no expert in the music sector, but I will say, in terms of the investor profiles of who they should be looking at, David said already, people in the industry. Like, one music tech business that I do know is called 𝗬𝗷. And a lot of their fundraising, again, the founder of that he was a singer-songwriter initially, and, through various contacts was able to raise money from well-known artists into that business early on and in later stages. So really, I would, if they're in the music space, I'm sure they know some artists. If it's music mixing, maybe they know some, DJs or whatever, maybe not mega successful or famous people, but there's plenty of DJs out there that would make enough on an annual basis to write, 10,000, 15,000 pound checks at an early stage. So I'll try and lean into your network, and, people surely will have links. So I'd really just network hard within that. And then, in terms of other angels, I would look at, there's a number of private equity funds out there that are doing investing in music rights and buying up music rights. I try and approach some of the partners of those places pretty directly. They may be interested in angel investing. I'm sure they have personal money they can do. So, just basically following on from what David said, looking very much within the music industry, people that have money and, will care about this, and also the greed factor, if you can show it, that David said.
Thanks a lot, Tommy. Guy, any thoughts? Mr. Panelli.
Sorry, I had to relocate because my Wi-Fi was going dicky. I think the guys have provided pretty fulsome answers. I'd just say on the right amount to ask for, as David said it, you need to put out a pretty good plan of what exactly are the funds you require. What do you want to achieve in the next 12 to 18 months? What's that going to cost? Do you put in some sort of contingency? And therefore kind of, whilst also being pretty efficient with your use of how you use that money, because the more you raise, the more you're going to dilute yourself, and the more you're going to reduce your own shareholding. So, map out that particular plan, build it as part of a forecast, and then you've also, you've got something to share with potential investors to show them exactly where that money is going to. The only thing I'd add, and I'm not an expert in this area whatsoever, but there is a lot of conversation around the use of AI within the music industry and potential copyright infringement, because depending on how you are using that AI, it's basically taking existing artists' songs and then creating new content out of that, but it's not actually new content, it's not original, because it's using what already exists. And that is something to be aware of. Is your product going to be a problem in that respect? Are you potentially building yourself up a lawsuit down the road because you've used Ed Sheeran's song and created a new song, but actually it's not original content in that respect? And that's probably a question that's going to come up with investors. And as I said, not my area of expertise, but something I have seen in the news a little bit over the last few months.
I hear you. And about that, actually, if I don't remember all the details, so please do not take my word for it, but there was a decision in the States that pretty much basically gave people some leverage in terms of music that they copy, i.e. that if it's a different music, even though that might have been trained on something else, if it's different music, you don't really need to worry too much. But you're absolutely right. For things like this, it's best to consult and get some legal advice. Now, I'm glad we've got two ladies to ask questions. So just before we go to Chloe and then Colleen, a quick reset of the room. This is Startup Fundraising Q&A. We do this every Thursday from 12 to 1 p.m. where we seek to help you with whatever questions you may have on your fundraising journey. There are no right or wrong questions, and there's no need to be shy. It's a learning curve for us all. Your questions today could be on anything from your investor outreach, the pitch decks, due diligence, exits, VCs, angels, corporate VCs, crowdfunding, loans, grants, whatever it may be. This is the place to ask it. Now, we run 4 regular rooms per week: Mondays talent, Tuesdays product and tech, Wednesdays growth, and Thursdays fundraising. They're all from 12 to 1 p.m. UK time. You can RSVP to all future rooms between now and the 19th of December if you go to our website, which is StartUp-to-ScaleUp.club, and there you'll be able to do so. If you are tuning in by YouTube or Facebook right now, please be aware that we're unable to monitor your questions, so please hop onto LinkedIn and search for Startup to Scale Up Club, where you'll find today's session, which is Startup Fundraising Q&A 116. And if you are listening, wherever you are, please feel free to share this with your network. Now, without further ado, Chloe, thank you very much for coming up. Please introduce yourself. What is it that your business does, and fire away with your question.
Yeah, hi there. Hi, I'm Chloe Sweden, founder and CEO of 𝗦𝘁𝗶𝗀. We help log and lower the environmental impact of fans attending live events globally. We are currently fundraising. We had to put our fundraise on hold for lots and lots of great client traction this summer. And I guess my question is around the raise. So we now have just opened our raise. We're going to be closing it by the end of the year. We've previously raised about 500K through various means, and this is an extension really of that round. I've had lots of people come and say that they could potentially help with this raise. So people within my network, CFOs, ex-accountants, people that are kind of knocking about and want to help. A lot of these people are male. In fact, all of them are male. And as David knows all too well, female founders find it very difficult to raise. But on top of the fact that I am a woman, we are also hugely busy. We are launched and live with the FA, with ATP, with a number of clients that are going to be rolling out this between now and Christmas. And it's really a bandwidth question as well. So I guess my question is do I accept help? Or how well that would be viewed upon from an investor's perspective. Obviously, I am the founder and CEO. I'm very happy to be in front of investors, but I'm also managing some big clients that we want to get right because we've got future revenue depending on it. So that's my question. I hope that's okay.
That is a brilliant question, and thank you very much for coming up, Chloe. And absolutely well done on what you've achieved so far with your business. You're absolutely right. For women, and I know I'm going to sound a bit morbid and vulgar, but today in the UK, if you're a female founder, you're more likely to get run over by a bus than get investment. So it's not easy, but very well done on what you've achieved so far. Now, I'll give you my quick 2 pence and then pass it on to the investors. Number one, in my experience, it used to be much worse and much frowned upon to have other people do the fundraising for you. I think that is changing a little bit, but I've just looked at your company LinkedIn page. It says you've got 11 people. Personally, I don't see much wrong with people doing the initial steps. So whether it's external or internal, to do the initial steps of your search, so investor outreach, and then you or somebody close to you in the company takes over that. In my experience, investors, especially what I would call institutional, so VCs and a few others, tend to be more open to speaking directly to the founders or people in the company rather than external. So maybe if there's a way for you to decide on 1 or 2 people that you think and really believe in them, for them to become advisors in the company, so they have some skin in the game rather than just looking for a fee, and then they do that initial outreach, I think that would be looked upon much more favorably. But again, this is only my experience. So perhaps now, Guy first, then David, then Tommy can give us their thoughts. Mr. 𝗿𝗂𝗍.
Hi. Great to hear from you. So I think there's nothing, if you're, as you say, you're busy basically building the business, then there's nothing wrong with bringing someone in externally to help you with the fundraise whilst you're doing that. And you're almost viewing them as an extension of your team, and therefore that's what you're paying them for. I think if you've had a number of different people coming to offer that kind of service, you need to understand exactly what they're offering you, what they can bring. Is it, will they be able to help with the marketing materials, with the building out the model, putting together a data room and investor introductions? And, there are a few people out there who will promise quite a lot in that respect and not really deliver much. So you've got to be very, very careful in that respect. Ultimately, I would say you would pretty much what Anton just said, view them as a gatekeeper to bring you good quality investor introductions. Ultimately, investors want to speak to you. You're the founder and CEO. You're the one driving the business. You're the person they're investing into. And therefore, but it's about making sure that gatekeeper, as it were, is bringing you good introductions so that therefore you're not wasting your time whilst you're clearly, working hard to grow the business. I think key things that they can also bring you is identification of a good lead investor. VCs are a complete, I haven't worked in that industry, I can say that, complete pain in the ass, because they'll all sit there thinking, well, that's very exciting and I'd want to do this, and then where's the lead? And then the moment the lead arrives, they'll all pile in. So, if you do bring someone in to help you in that respect, can they bring a good solid lead or a number of different people who can do that lead role? And then also, what's your existing investor or cap table doing? It sounds like if you've raised $500,000 already, you've got a good solid business that people were excited about and they put money into you already. So are any of those people following on, and therefore can you go out to the market and say, look, those guys invested before, this is now what they're going to do. We've got good traction in the round already, and now we're going out to kind of fill that gap.
That's brilliant. Thank you very much for that. I can't remember if I said Tommy or David first, but whichever of you fellas wants to go first.
I believe it was me. Hi, Chloe. So I'll refer to the specific question of an advisor. As an ex-VC, most VCs will look at it very unfavorably if an advisor approaches them. Mainly, especially if most advisors don't actually know VC, so you just get multitudes of emails saying, hey, I'm working with this startups, would you like to take a look? And then they take a fee out of it. But the main reasons VCs look at it unfavorably is because, again, theoretically it should be like that from the founder's perspective. I don't want, like 99% of investors say no, so I don't want to waste my time. But VCs look at it from a different perspective, which is, I need the founder to be the salesperson of their company and the vision, and I want to build my relationship with them. And I know that they will need to do that with the next investor down the line in the next round, and the next round, and the next round. So I want to see their capabilities. It's a biased approach. I'm not saying it's the right one, but that's one of the reasons VCs, when they look at it, they look at a very niche, narrow, specific type of founders that will need to raise and continuously raising. So those skills really matter. That being said, like 99% of startups shouldn't go to standard VCs. There's a lot of other investors that most businesses are very well suited for, and where advisors and connectors can help. From family offices to EIS fund to VCT funds, they are more than happy to invest in a very balanced way. And this is specifically EIS and VCT are in the UK for those are not UK based. But in true, from angel syndicates, solo GPs, and so on. The only thing I'll be very careful is, as a guy that also used to be an M&A advisor, so I was paid to do exactly that, is you need to understand that most advisors don't actually know most of the people, and they'll just do the cold outreach, which doesn't actually work. So if you want to hire somebody and give them, usually a success fee runs anything between 2 to 5% of how much they raised, you need to make sure that they're actually good. So I would talk to founders that they actually raised for and get recommendations. And I'll put a lot of time to due diligence them as an advisor that helps fundraise, because unfortunately, a lot of them just do the spray and pray, which is like, if somebody says yes, they're already in. And one last tip is, they should send you an email of all investors they have good connections with before, and you'll need to approve them, because they will want to take a part of everything you raised versus a percentage just on the money that they bring in. And that's it.
Spot on. Thank you very much for that, David. Mr. Breen, any thoughts on this?
I'd actually missed the original question because my connection dropped off. But I've kind of gathered what it is about advisors for early stage. I think, David's covered it pretty well there. Whenever you're at a very early stage, VCs want to see you proactively going out and actually trying to raise money yourself and being that, point person, the salesperson for the business. So, I would be careful about using advisors at a very early stage unless they're going to actually, bring you some, different capital. I guess, for us at the growth stage, we're working purposely not in that early stage because, we don't really see a place for us there in between VCs. VCs don't really work with us. The institutions we work with for bigger rounds tend to be, the large asset managers that have growth funds, or else, the big private equity houses that have growth funds, and then family offices, pension funds. So we work with some large growth stage VCs, but not a lot. But as David has highlighted, VCs don't really tend to work with advisors. And at the growth stage, we don't really have, I think over 300 institutional investors in the platform. And I would say, maybe 5% are VCs. So that will just give you like an idea at the growth stage, which typically, some companies do need advisors because it could be a bit more structuring involved and things like that, and how it's done. It's not, a straightforward equity at times, but even at that stage, there's still very little engagement between the advisors and venture capitalists. They still expect you to kind of be there yourself. And then the other point I'd say is, if you're at the early stage and you're going out, you should be going after angels, and actually good angel investors will proactively introduce you. The good angels will know VC funds because typically they'll have invested in companies that have then gone on to raise venture. And so the really good angels do have a good network in that space. And if they invest in you, they will just introduce you for no fee because it's in, their best interest to go and help you get more capital, get institutional capital. So if you can get good angels involved, they will actually do some of this for you anyway for no extra charge. So you get investment from them for equity, plus they'll help you find other investors.
Thank you very much, fellas. And two last bits, Chloe, if I may. This is what I would do. I would, if you've got somebody working full-time for you, I would give them some criteria on the kind of investors that you want. And if you're based in London, you can go to the City of London office, SBREC, I believe it's called, the Small Business Research something. You can use there for free 𝗏𝗏 and a few other databases that you can search for investors. Give somebody in your company some criteria for them to select, let's say 100 investors. Angels probably is best, and Tommy's right here at this stage. And give them some criteria and then rank them from number 1 being the most sort of desirable investor that you want, and number 100 being the least desirable. And ask this person to start outreach with these investors from the bottom. That way, even if they or you make any mistakes in how you do this, it's not going to be the end of the world, because it's not your most desirable investor. That's number 1. And number 2, you said you've raised 500. Go to those investors. I think someone here mentioned that. Go to those investors and ask them to make introductions, because 1, it's in their interest if they're worth their salt, and 2, they'll know these people, and it's actually seen as a good thing, at least in my experience. VCs and even other angels see it as a good thing if somebody who's already invested in you reaches out and says, would you like to join us in our next round? I hope you found that helpful, Claire.
Hi, and thanks, guys. Yeah, no, super, super helpful. I think just for clarity, so we are backed by Sustainable Ventures, by Techstars, and they are going out on our behalf and talking to their network. 𝗦𝗁𝗏 is actually coming into this round as well, who are an angel syndicate. So they are also going to be helping us to source more angels. But I think the point of that lead investor is obviously really crucial. I think actually hearing about sort of, from VC's perspective, they don't want to hear from anyone else, which has always been our thought on this, which is why I've always taken the lead. I don't know why it says we've got 11 people. We've got 5 in the business, 3 are in product and tech. And then it's so really myself is lead on sales and investor stuff. So there's not much extra fat in the business to be able to give lots of extra tasks to, unfortunately.
Find an intern. Find an intern, Chloe.
Yeah, potentially. Yeah, I think that is. I think that's what I'm kind of hearing in terms of like there's an admin side to the investor raise, which is potentially useful for us to farm out. But beyond that, actually, it is just going to take up 90% of my time now moving forwards, and maybe that's okay that the product goes on hold, and and we might have to down tools in other areas of the business in order for that to happen. But yeah, it's been super helpful to hear. I mean, we don't need help from the data rooms up and running, the decks up and running, financial models done. So I don't think if we were going to get an advisor that could help in those areas, we don't need that. I think hearing what you were saying about kind of actually a lot of the people say they've got great connections, and actually when it comes to it, they don't. I think that's definitely been our experience anyway. So yeah, I think there's probably a lot of sleeves rolled up that we have to do and crack on. But yeah, I think we might get someone to just put some stuff into spreadsheets for us to help us with the admin.
Brilliant stuff. Well, thank you very much for joining us, and very well done on what you've achieved so far, Chloe. And please do feel free to join us again. We'd love to hear on your progress, or see if we can help with anything else. And thank you very much. And just before we go on to Colleen, just a quick reminder: we'll run 4 regular rooms per week. Monday's talent, Tuesday's product and tech, Wednesday's growth, and Thursday's fundraising. They're all from 12 to 1 p.m. UK time, and you can RSVP to those via StartUp to ScaleUp.club. Between now and the 19th of December, we've got them all published. Without further ado, Colleen, welcome back. I think you've been, maybe when we were on Clubhouse, I can't remember seeing you since we've moved to LinkedIn, but please introduce yourself and fire away with whatever questions you have for us.
Thanks, Anton. Hi, everyone. It's Colleen Brennan Vandersteen, CEO of Save Our Planet Refillery. We're transforming distribution with new infrastructure and technology to remove packaging, which will reduce costs, waste, and carbon emissions. We're selling systems to industries because removing packaging increases profits for everyone, even cities. And actually, I'm just preparing for a major city who's interested in the system for their metro, the school divisions, prisons, support infrastructure. The system will reduce their costs and create a new revenue stream for them. And it is a major city in the US. That's I'm presenting to the advisory board for them. And I have big interest from retail because our system has the #1 key feature, which is theft and shrinkage prevention. Global retail reports 100 billion loss every year. They can't steal it if it's not in a package. Anyways, I want to know, I have full project funding from the EU climate bonds. However, there's a delay. And so with that delay, I'm looking for a bridge loan. And I've been speaking to like 5 investors. And I get the impression from each one of them that they think they have time. First of all, it's a bridge loan to keep me going. And so it's kind of like a quick loan. Do they want to know that there's so there's 5 investors. Do I tell them there's somebody else thinking about it as well? Or is it to be quiet about that and just tell them if somebody comes and takes, approves the bridge loan? Is it rude to not tell them, or is it rude to tell them there's a lineup?
I hear you. Thank you very much for that, Colleen. Very well done on your business so far, and especially this potential deal with the city. Personally, I would actually go and get a loan. Perhaps there are some invoice financing companies or banks out there. If you can get this city to sort of accept a purchase order or something like that, that's brilliant. If there's no way you can do that, and you definitely need some kind of bridge investment, then at least get the city to write some kind of LOI, or just use the fact that you're going to present to them. But in terms of whether it's a good idea to tell people that you've got somebody interested, absolutely yes. But I'd love to hear what the chaps here on the panel got to say. So maybe we can start with Guy, David, and Tom.
Yeah, congrats, Colleen, on the progress you've made. Can I just ask, is this loan a convertible or just straight debt?
Straight debt.
Straight debt, okay. Fine. So I think I would agree with Anton. I think it's the kind of herding the cats answer I had for the previous question. People will just kind of sit around, and there won't really be much kind of for you. Obviously, you want to raise the money as quickly as possible. For them, they may be less kind of concerned on timing. So if you can kind of group people together to de-risk it, create a little syndicate of the guys who got involved, you just need to do it in such a way that you don't kind of put their noses out of joint, as it were. So, but I think, the more transparent and maybe that someone wants to do half the loan, but not the whole thing, and therefore you can match 2 people together to put the whole thing together. So I think if you approach that carefully, introducing them makes sense to my mind.
Thank you very much, Guy. Yes, David.
There's a lot to unpack here, but basically it's creating FOMO, fear of missing out, always works. The challenge is it can also ruin stuff. So the way I would approach it, especially around loans, because like usually loan people don't move fast, is trying to understand what is their expected pace and what's their own process. And you definitely mention and say, hey, I have a process ending that they'll get back to me in the next 3 weeks by mid-November. So I need to know by then. So you need to manage the process, and then they can either adjust to it or not. I think the problem is if you don't have transparency in what's their own process, it will be very difficult for you just to actually get them moving. Because if you think about it, like as a loan provider, I'm judging risk reward. So if you try to push me, my knee-jerk reaction will be like, oh shit, she needs money fast, but I'm not really like, that means it's too risky. So the balancing act will be just like, listen, as a responsible CEO, I'm managing several initiatives, and I'm expecting to get responses by this date. Would love to understand if you can adjust to it or not. And if you can't, what do you need from me to actually get to this date? And then basically manage the process proactively on both sides of it. Hopefully that was helpful.
Good point. Thank you very much. Tom?
Yeah, some good points there from David. I think, you know, debt's obviously quite a bit trickier than, especially when it comes to bridges, than equity. And like, you know, I guess the debt investors you're speaking to, I'm not sure, you know, what kind of institutions they are, but, you know, from their perspective, it's in their interest to let this drag on until you're close to being out of money, because then they can charge you a higher interest rate on it. So, you know, they probably will, they're kind of incentivized to move slowly, and trying to get them to speed up is tricky. So, you know, you also don't want to scare them off, as David has said. So, you know, it is a fine balance. You know, I would try maybe thinking about who's your least good option on the table now, who's, you know, deal, if they've got any deal terms or potential terms, and maybe try and see if you can push them, because you don't really want to go to others and say, oh, I've got others involved and they're moving forward, if that's not true, and others start pulling out, because then you're kind of, you know, left in a pretty precarious position. So it is tricky. And, you know, I know we said in the, you know, the last question that, you know, advisors weren't typically very useful for early stage VC fundraising, but, you know, when it comes to debt, because it is trickier, you know, it may be prudent to look into advisors. So I don't really know how much the loan is, what the ballpark is you're looking for, but, you know, it just may be whenever it's debt that it's, you know, maybe helpful to actually have an advisor on board to help you with that actually knows some of the debt providers.
Thanks. All great advice. I do love that I put a timeline on everything, which I have not done. And so I think that's why they take their time. I'll be honest with you, the presentation that I'm doing to Manhattan is very soon. And I'll just get a purchase order and go for purchase order financing. And if they think they have time, it is FOMO. They will miss it. So but I don't know how to say, and I really like the saying, I'm managing several initiatives and give it a timeline. That is a great line that I will continue to use. I did have, I'll be honest with you, I've had letters of interest from Home Depot Canada, and it didn't help me at that time. I think there's a lot of there's too much slowdown in finance, and I think a world in crisis truly needs speed to funding, and that's not existing. So I think finance needs to revolutionize. I have ideas as a lean architect. Anyways, it's kind of interesting. The experience has been extremely insightful of how this world is running. I'll be honest with you, the world's running at 10% efficient. There's nothing really working. That's why we're in a crisis, many ways.
One step at a time.
Absolutely, I'm learning. Yes, the beauty of it is having the innovation, and the EU climate bonds, I hope, they're very close to getting the loan. So it'll be too late, maybe, but
here's another idea, Colleen. Since you're presenting to Manhattan, maybe make a list of certain banks or institutions that do these kind of loans, and literally write like a proposal, like a business proposal, and send it to, I don't know, 20, 30 of them in and around Manhattan, and say, this is what I'm about to do. I've got this deadline, and I'm reaching out to a few of you that I've seen that work in this area. Basically compliment them, give them something to say that you are the right person or the right institution, basically, for me. Let me know if you're happy to have a chat and explore this further. Basically, you then turn the tables from, oh, I beg you to give me some money, to, there's a business opportunity here, do you want to join it or not? That might be where I've seen that happen before, and happen successfully.
My apologies, I need to move to another meeting.
That's okay, Jay. Really appreciate your time, buddy, and hopefully we'll see you again.
Thank you, everyone. Great advice, all of it. Thanks, Anton. I really enjoyed it. Thank you.
I've got ahead as well, Anton. Thank you very much. Thanks all.
Best of luck, money. Thank you.
Yeah, I gotta go as well, but thanks everyone for the questions.
Thank you very much, Tommy. Right, I guess my parting words and just closure of this, This has been Startup Fundraising Q&A. It's our 116th session. We have been doing these sessions for over 3 years now. We run 4 of those per week. Mondays talent, Tuesdays product and tech, Wednesdays growth, and Thursdays fundraising, where we bring some of the top people in our startup ecosystem, from successful founders to veteran operators to savvy investors, and all in between and beyond. So if you want to get advice and get the right advice, please feel free to join us. If you go to StartUp2ScaleUp.club, you'll be able to RSVP to all our sessions between now and the 19th of December. On the other hand, just remember, the startup journey can be both exciting but also quite challenging. So try to have some fun in the meantime and be kind to yourself and everyone else for that matter too. Otherwise, have a great weekend. Thank you very much for joining us. God bless you all, and hopefully see you on Monday for Startup Talent Q&A, where you get to learn a bit more about hiring and keeping the right people. Bye-bye for now.